Kevin Warsh, when he spoke on the FOMC meeting, basically just priced out, eliminated any possibility of an interest rate cut in 2026. And in fact, the probability of getting an interest rate hike in 2026 is higher than it ever was before. And yet, for some reason, this is bullish for banks. This is bullish for SoFi. What? What are you saying? Interest rate hikes are so bearish for banks, bearish for fintech, for finance. What are you saying? I'm going to talk about exactly my opinion, exactly what I see, and we're going to talk about market sentiment and as well as market reaction to what was spoken, what was touched upon in that FOMC meeting. So when we talk about interest rate hikes, what are the two, I would say the two main sectors that is the most bearish for? Specifically, in my opinion, it's going to be banks and fintechs, as well as small caps, right? Why is it bearish for fintechs? Obviously, just because when money is expensive, right, it's just harder to lend out. So then it's just bearish for financials, such as banks, such as fintechs, for that exact reason. And why is it bearish for small caps? Well, because if small caps, usually they take out a lot more debt. And when they take out a lot more debt, that means that if the interest rates go up, then they have to pay more in order to finance their debt. So that's why it is bearish for small caps. However, let's look at the market reaction. Let's look at how these indices, these sectors of the economy perform after FOMC meeting. This is the KBWB Bank ETF. Kevin Warsh spoke on the 17th, right? This was at 93.55. It's flat. We'll say it's flat. Again, we're up since the market basically priced in a higher probability of a rate hike. SoFi Technologies, June 17. Okay, we're basically flat, right? 1742 to 1738, we're basically flat from when we priced in a rate hike. IWM, we're up. In fact, we're at all-time highs since we priced in a rate hike, right? We're actually, so we'll say it's, did you speak on Wednesday? Or I think you spoke on Wednesday, right? Yeah, so we're actually up since we priced in a higher probability of a rate hike. And this goes back to the idea of news failure, and why news failure I think is very important to look at, because it basically signifies, or at least it shows a high likelihood of capitulation. When you're in a bear market, or when you see the market falling, right, and then you get more bearish news, and then the market doesn't actually fall in that more bearish news, because you would expect the market to fall on more bearish news, but the market actually goes up on bearish news. That is very bullish for the market, because that basically signifies that there's no one else willing to sell, because you have more bearish news, right? This exactly happened in the end of March, I forget it was March 31st or April 1st, but I think Trump said he was gonna bomb the living shit out of Iran. I think oil prices spiked to like $115, $120, and the markets went up that day. The markets were, they were dark red pre-market, but then during markets and after market, it ended up, right? It ended up on the day. And that, in my opinion, is how important it is to look at news failure. This is something I learned from Jason Shapiro, and I recommend his channel. He's definitely a lot smarter than me. But again, looking at these charts, right? This is not supposed to happen. Bank stocks are not supposed to go up. When we price in rate hikes, right? SoFi is not supposed to go up, or at least it's not even supposed to stay flat. When we price in rate hikes, IWM is not supposed to be up. It's not supposed to be up $6 when we price in rate hikes, but they are up. And that, in my opinion, kind of signals the bottom. And that's what I mean when I say that even though Kevin Warsh basically saying things during the FOMC that priced in a higher probability of a rate hike, why is that news bullish for these sectors, for the banking sector, for the banking sector, for financials, for small caps? It's because of market sentiment. It's because it shows you how the market reacted to what he said is, in my opinion, very bullish. I mean, these could be famous last words, and I mean, everything could just crash tomorrow, right? But I think that this could be the bottom of, at least for this cycle, for financials, for small caps. And I think that we have room to rip higher, right? Now that we're just looking at the price action of SoFi in the past few days has actually been making me very bullish because of its response, because of its reaction towards negative news. Obviously, there was some positive news as well. There was the composer news that kind of just, I guess, it rolled out more, but like that news was already, it should have already been priced in a few weeks or a month ago, right? It's not even, it's like, I wouldn't say that composer news is actually that, I wouldn't say that composer news should be that heavily weighted, because it should have already been priced in a few weeks ago. But now, despite this negative news, that interest rate hikes now have a higher probability of happening in 2026. These stocks are up. I'm just going to double down and say that I think that this could be the bottom of financials, the bottom of small caps. But again, I could be completely wrong. And then if I am wrong in the coming days or weeks, you can laugh in my face. But otherwise, this video is not really on any stock specifically. I guess kind of SoFi, but that's just because that's what I'm exposed to. But I guess just TLDW, news failure is really important to look at in both the bearish market, where stocks stop falling and actually rise on bearish news, or in a bullish market where stocks stop rising and in fact fall on bullish news. But that's just a quick me rambling about news failure and hopefully the bottom of fintechs and financials, because otherwise my portfolio can't really handle it. Peace. Bye.